Picture a chessboard where most players are struggling to protect their pawns, while a select few are already thinking 10 moves ahead, positioning their pieces not just to survive the next crisis, but to emerge exponentially more powerful from it. This is the reality of modern capitalism, where individuals like Elon Musk and Jeff Bezos don't merely weather economic storms, they harness them as engines of unprecedented wealth accumulation. The story begins not with these titans themselves, but with a fundamental truth about crisis economics that most people never fully grasp. When markets collapse and economies shudder, wealth doesn't simply vanish into thin air, it transfers. It flows from the many to the few, from the over-leveraged to the liquid, from those who must sell to those who can afford to buy. This isn't a bug in the system. For those positioned correctly, it's the most lucrative feature imaginable. Consider what happened during the 2008 financial crisis. While millions lost their homes and retirement savings evaporated, a small group of investors who had maintained significant cash reserves went on the greatest shopping spree in modern history. Warren Buffett famously invested billions in Goldman Sachs and Bank of America at rock-bottom prices, deals that would eventually net Berkshire Hathaway tens of billions in profits. But Buffett was playing an old game with old rules. The new generation of billionaires has discovered something even more powerful. They've learned how to engineer their own advantages before, during, and after economic catastrophes. The genius of someone like Jeff Bezos lies not just in building Amazon, but in constructing a business model that becomes more dominant during crises. When COVID-19 shuttered physical retail stores worldwide, Amazon didn't just survive, it absorbed enormous chunks of the retail economy that may never return to their previous form. The company hired hundreds of thousands of workers, while others were laying off millions. Every small business that closed became potential market share for Amazon to capture. Every supply chain disruption that crippled traditional retailers became an opportunity for Amazon's sophisticated logistics network to prove its superiority. This wasn't accidental or merely fortunate timing. Amazon had spent 2 decades building infrastructure specifically designed to thrive when traditional systems fail. Their warehouses, delivery networks, and cloud computing services represent what economists call anti-fragile system structures that don't just withstand shocks but actually grow stronger from them. When the next crisis arrives, whether it's financial, biological, or geopolitical, Amazon's position will only strengthen as desperate businesses migrate to their cloud services to cut costs, consumers shift even more spending online, and competitors struggle with the capital requirements to match Amazon's scale. Elon Musk operates from a different but equally crisis-advantageous position. His companies, Tesla, SpaceX, Neuralink, and others, are positioned at the intersection of multiple crisis narratives. Climate change creates demand for electric vehicles. Geopolitical instability makes countries desperate for energy independence, driving them toward Tesla's batteries and solar panels. The threat of civilization-ending events makes SpaceX's vision of multi-planetary existence seem less like science fiction and more like necessity. Every crisis that threatens the status quo validates Musk's narrative that radical transformation isn't just profitable, it's essential for survival. But here's where the story becomes truly fascinating. These billionaires don't just profit from crises after they occur. They possess the market influence to accelerate or even trigger the very disruptions from which they benefit. When Musk tweets about cryptocurrency, markets convulse. When he suggests Tesla might accept Bitcoin, then reverses course, billions of dollars in value shift within hours. This isn't mere market manipulation, it's something far more sophisticated. It's the ability to create volatility that shakes out weaker players while strengthening one's own position. The mechanism works like this. Volatility creates fear, fear creates selling pressure lowers prices, and lower prices create buying opportunities for those with capital reserves. But it goes deeper. Volatility also forces regulatory responses, and regulatory responses often favour established players who can afford compliance costs while crushing smaller competitors. It forces industry consolidation where distressed companies sell themselves to larger rivals. It accelerates technological adoption as businesses desperately seek efficiency gains to survive. Consider how this played out in the electric vehicle market. Tesla spent years burning through capital, seemingly always on the brink of bankruptcy. Traditional automakers largely ignored the electric vehicle market, confident in their existing advantages. Then came a combination of crises, environmental regulations, tightening, pandemic disruptions hitting traditional manufacturing, chip shortages crippling production lines, and oil price volatility making gasoline vehicles less predictable to own. Suddenly, Tesla's years of losses looked like strategic positioning. While other automakers scrambled to develop electric vehicles from scratch, Tesla had already achieved manufacturing scale, built out charging infrastructure, and accumulated years of real-world data to refine their technology. The financial engineering behind these positions is equally remarkable. When interest rates are low, as they have been for much of the past decade, billionaires can borrow against their assets at rates far below the expected return on investment. Bezos can borrow billions against his Amazon stock at perhaps 2 or 3% interest, then deploy that capital into opportunities, yielding far higher returns. When a crisis hits and asset prices plummet, this borrowed money becomes a weapon of mass acquisition. But low interest rates are just one part of the equation. The real advantage comes from understanding that modern financial crises follow predictable patterns. First comes the shock, a pandemic, a war, a banking failure. Then comes the panic selling as leverage players are forced to liquidate positions. Then comes government intervention, almost always in the form of massive money printing and stimulus. Finally comes the recovery, where asset prices don't just return to previous levels but often exceed them due to all the new money in the system. A billionaire who understands this cycle can position themselves perfectly. They maintain liquidity during the good times, even if it means lower returns in the short term. They wait patiently for the crisis, knowing it will come because it always does. When panic selling begins, they deploy capital selectively, focusing on assets that will benefit most from the inevitable government response. Then they wait for the stimulus to flow, driving asset prices higher and multiplying their wealth. This strategy becomes even more powerful when combined with political influence. Large corporations and their billionaire leaders don't just wait for government responses, they help shape them. They have armies of lobbyists, relationships with policymakers, and the perceived importance of being too big to fail. When the 2020 pandemic struck, who benefited most from government programs? Large corporations received billions in loans and grants, while small businesses struggled to access limited funds. Stock markets, buoyed by Federal Reserve interventions, reached record highs even as unemployment soared. The tax system itself becomes a tool for crisis exploitation. Billionaires can use paper losses during downturns to offset future gains, effectively allowing them to make tax-free profits during recoveries. They can donate depreciated assets to charitable foundations they control, taking tax deductions at pre-crisis valuations while maintaining effective control of the assets. They can move money between jurisdictions, taking advantage of crisis-induced regulatory loosening to optimize their tax positions. But perhaps the most powerful advantage billionaires possess during crises is psychological. While ordinary investors panic, selling at the worst possible moments, billionaires can afford to think in decades rather than quarters. Bezos famously takes a 7-year view on investments, asking not whether something will be profitable next year, but whether it will dominate its market in the next decade. This long-term thinking allows them to see crises not as endpoints, but as acceleration points for existing trends. The remote work revolution that COVID accelerated was already visible to those paying attention. Cloud computing adoption, e-commerce, growth, digital payment expansion, all of these trends existed before 2020. The pandemic simply compressed a decade of change into a year, and those positioned for these shifts captured extraordinary value. Zoom's market capitalization exploded. PayPal and Square saw massive growth. Amazon Web Services became even more essential as businesses rushed to enable remote operations. This brings us to an uncomfortable truth about modern capitalism. The system doesn't just allow for crisis profiteering, it incentivizes it. Public companies are legally obligated to maximize shareholder value. If a crisis presents opportunities for growth, management teams that fail to capitalize on them could face lawsuits from shareholders. The moral hazard runs deep. Why would a billionaire work to prevent crises when they stand to gain so much from them? Consider climate change from this perspective. While it poses existential threats to millions, it also represents perhaps the greatest business opportunity in human history. Entire industries must be rebuilt. Infrastructure must be replaced. New technologies must be developed and deployed at scale. For someone like Musk, whose companies are positioned as climate solutions, every hurricane, wildfire, and heat wave validates his business model and drives demand for his products. The worse the crisis becomes, the more essential his companies appear. The same logic applies to social and political instability. When trust in institutions erodes, private alternatives become more attractive. When governments appear incompetent, corporate solutions seem more credible. When public services fail, private providers fill the vacuum. Each crisis of confidence in public institutions strengthens the relative position of private power. The network effects of billionaire crisis advantages compound over time. Wealth concentration means fewer decision makers controlling more resources. These decision makers know each other, invest in each other's ventures, and share information through formal and informal channels. They sit on each other's boards, attend the same conferences, and often share the same investors. This creates a kind of crisis coordination without explicit conspiracy, a natural alignment of interests that allows them to move in concert when opportunities arise. The media landscape amplifies these advantages. Billionaires increasingly own major media outlets. Bezos owns the Washington Post, Musk owns X, formerly Twitter, and others have significant media investments. This doesn't require direct editorial control to be influential. The mere fact of ownership shapes coverage, determines what stories get resources, and influences how crises are framed for public consumption. A financial crisis might be portrayed as requiring exactly the kinds of solutions that benefit these owners' other investments. The venture capital ecosystem adds another layer to this advantage. Billionaires don't just invest their own money, they attract other investors who want to follow their lead. When Musk invests in a technology, it gains credibility that attracts additional capital. When Bezos backs a startup, it gains not just money, but access to Amazon's ecosystem. This multiplier effect means that billionaires' bets on crisis-related opportunities become self-fulfilling prophecies. The education system, particularly elite universities, plays a supporting role in this structure. Business schools teach case studies of successful crisis navigation, implicitly training the next generation to see economic disruption as opportunity rather than tragedy. They celebrate the entrepreneurs who disrupted industries without dwelling on the disrupted workers and communities. This creates a cultural framework where crisis exploitation isn't just acceptable, it's admirable. Even philanthropy becomes a tool for crisis advantage. The Giving Pledge, signed by many billionaires, commits them to donate the majority of their wealth eventually. In the meantime, that wealth remains under their control, growing through crisis cycles and maintaining their power to shape responses to future disruptions. Charitable foundations provide tax advantages, political influence, and social credibility while keeping assets within the billionaire's sphere of influence. The technology sector introduces unique dynamics to crisis profiteering. Unlike physical assets, digital platforms and software systems can scale almost infinitely without proportional cost increases. When a crisis drives millions of new users to a platform, the marginal cost of serving them approaches zero, while the value of the network increases exponentially. This creates winner-take-all dynamics where crises don't just advantage large players, they essentially eliminate smaller ones. Artificial intelligence and automation add another dimension to this story. Billionaires investing heavily in these technologies stand to benefit enormously from any crisis that makes human labor more expensive, less reliable, or legally complicated. A pandemic that makes human contact risky accelerates automation adoption. Labor disputes or minimum wage increases make robots more attractive. Each crisis that disrupts human labor patterns strengthens the business case for the automation technologies these billionaires are developing. The financial derivatives market provides sophisticated tools for profiting from crisis. While ordinary investors might buy stocks hoping they increase in value, billionaires can use options, swaps, and other instruments to profit from volatility itself. They can bet on specific types of crises occurring, hedge against multiple scenarios simultaneously, and even create synthetic exposure to crisis events without directly participating in them. These tools, mostly inaccessible or incomprehensible to average investors, allow billionaires to transform uncertainty into profit. The international dimension multiplies these opportunities. A crisis in one country might benefit companies operating in another. Currency fluctuations during crises can generate enormous profits for those positioned correctly. Regulatory arbitrage playing different jurisdictions against each other becomes easier when governments are desperate for investment and tax revenue. Billionaires with global operations can shift profits, losses, and assets between countries to maximize crisis-related advantages. The psychological impact of repeated crises creates learned helplessness in populations while empowering those who successfully navigate them. Each crisis that billionaires survive and profit from increases their credibility as economic leaders. Their opinions carry more weight, their predictions seem more prescient, and their solutions appear more credible. This creates a feedback loop where crisis success leads to greater influence, which leads to better positioning for the next crisis. The debt dynamics of modern economies make crises both more likely and more profitable for those who understand them. Governments, corporations, and individuals have taken on unprecedented levels of debt, making them vulnerable to interest rate changes, economic slowdowns, or confidence shock. Billionaires who maintain low leverage or access to cheap capital can acquire distressed assets from over-leveraged sellers at extraordinary discount. The more debt in the system, the more violent the crises, and the greater the opportunities for those with dry powder. Looking forward, several potential crises loom on the horizon, each presenting massive opportunities for prepared billionaires. The commercial real estate collapse, accelerated by remote work trends, could allow them to acquire prime properties at Depression-era prices. The mounting student debt crisis could drive millions toward alternative education platforms they're building. The aging population and healthcare cost crisis could validate their investments in biotechnology and life extension research. Each crisis serves as a catalyst for wealth transfer from the unprepared many to the positioned few. The central bank digital currency revolution represents another crisis opportunity nexus. As traditional monetary systems show strain, billionaires investing in cryptocurrency, blockchain, and digital payment systems stand to capture enormous value. They don't need cryptocurrency to replace traditional money, they just need enough instability in the traditional system to drive adoption of alternatives they control or have invested in heavily. The insurance industry provides another avenue for crisis profits. Climate change makes traditional insurance models unviable in many regions, creating opportunities for new approaches using big data, artificial intelligence, and novel risk-sharing mechanisms. Billionaires with access to vast datasets and computational resources can price risk more accurately than traditional insurers, capturing profitable segments while avoiding losses. Even social and cultural crises become business opportunities. Political polarization drives engagement on social media platforms. Cultural conflicts create demand for alternative platforms, media outlets, and information sources. Identity crises drive consumption of products and services that promise belonging or distinction. Each fracture in social cohesion can be monetized by those who understand how to position products and services as solutions. The ultimate crisis, the potential end of capitalism itself, might be the greatest opportunity of all. As inequality reaches levels that threaten social stability, billionaires who position themselves as reformers, rather than robber barons, could emerge even more powerful. By advocating for universal basic income, funded by taxes they largely avoid, supporting stakeholder capitalism while maintaining control, and promoting sustainable development through their companies, they can appear as saviors of a system that has enriched them beyond imagination. This isn't to suggest that billionaires actively wish harm upon society. Many genuinely believe their innovations and investments benefit humanity. But the structure of modern capitalism creates alignments between their interests and various forms of crisis. They don't need to cause crises to benefit from them, they just need to position themselves appropriately and wait for the inevitable disruptions that complex systems generate. The COVID-19 pandemic illustrated these dynamics perfectly. While small businesses closed permanently, Amazon hired hundreds of thousands. While commercial real estate collapsed, data center demand soared. While traditional education struggled, online learning platforms exploded. While conventional retailers failed, e-commerce thrived. The billionaires who owned the winning side of each of these trades didn't create the virus, but their wealth increased by hundreds of billions while millions suffered economically. The story of billionaires in crisis is ultimately a story about system design. We've created economic and social structures that concentrate advantages during stable times and multiply them during unstable ones. The very innovations that generate enormous wealth platforms, networks, automation also create brittleness in traditional systems. When those systems fail, the owners of the new systems don't just win, they win by default, absorbing the functions and value of what collapsed. This dynamic becomes self-reinforcing over time. Each crisis that enriches billionaires gives them more resources to prepare for and profit from the next one. Each disruption that validates their business models encourages more investment in disruption. Each transfer of wealth from public to private hands weakens collective capacity to respond to crises while strengthening individual capacity to exploit them. Understanding why billionaires benefit from crises isn't about vilifying individuals, it's about recognizing how systems create incentives and outcomes. In a world where capital compounds, information is power, and scale advantages are decisive, those who start with the most resources will naturally accumulate even more during periods of disruption. The question isn't whether billionaires want crises, it's whether our current system can generate any other outcome when crises occur. As we stand on the brink of potential new crises, geopolitical tensions, climate tipping points, technological disruptions, social upheavals, the positions being taken by major billionaires become clear. They're investing in space exploration, artificial intelligence, renewable energy, biotechnology, and digital currencies. Not just because these are growth sectors, but because each represents a hedge against and opportunity within potential crisis scenarios. They're building bunkers in New Zealand while simultaneously creating the technologies that might make such retreats necessary. The next crisis, whatever form it takes, will likely follow the established pattern. Initial shock will create panic selling. Government intervention will attempt stabilization. Money printing will inflate asset prices. And those who maintain liquidity, positioned correctly, and had the psychological fortitude to act when others panicked, will emerge with an even larger share of global wealth and power. The cycle will continue, each iteration concentrating more resources in fewer hands until either the system fundamentally reforms or reaches a breaking point that no amount of individual wealth can withstand. This is the chess game being played at the highest levels of global capitalism. While most players struggle to protect their pawns, their jobs, homes, and savings, a select few are already thinking 10 moves ahead, positioning not just to survive the next crisis, but to emerge from it controlling an even larger share of the board. They don't need to wish for crisis any more than winter wishes for summer to end. They simply need to prepare for the inevitable changing of seasons and be ready to harvest what others are forced to abandon in the cold.